All right, guys. So we'll start with quickly on the volume profile. I'm not going to go through all the slides that we did previously. I just want to touch base on some of them. If you're new to the Discord, basically there's a PowerPoint that I put together with various resources, some of it from my experience as well, where I kind of explain what is volume profile and what is the best way to use it. And it's kind of now like a living document. I'm trying to put all I know, some kind of order that would make sense for you guys. And if you guys feel like it's not flowing well or you're confused, just provide some feedback on the message, and then it will help me the best way to teach you guys on how to approach it, actually how to teach you guys, because not everybody learns the same way, right? So what is volume profile? You guys are probably familiar with the vertical volumes, which basically measure how many shares were traded at the time of the day. Horizontal lines tell us how much volume was traded on the level that you're on right now. So the higher the horizontal lines, the shelves, the more volume was traded. So it usually means accumulation. It can mean a lot of buying, a lot of selling. So usually those type of shelves don't get created by retail traders. That means a lot of times institutional traders are in the play. And if anyone on a call, if all of you guys are comfortable with this, let me know, and then we can skip through this. Is there anyone that needs a refresher on this? It's okay if you say yes. I don't mind doing it. Somebody answer. Does anyone need a refresher on this? On volume profile overall.
Yeah, can you touch on it briefly?
Yep. All right, we'll keep going. So, and then people confuse themselves, when you start researching more, hopefully, it kind of sparks you to look into it and research and then read the book by Dale on volume profile. Don't confuse this with the market profile. Market profile is totally different. I would say volume profile is more accurate in terms of, levels. Market profile is also accurate, but, it's concerned with the time. How much time did the price spend at a level? When you think about it, if the price is being accumulated at the level, well, that means it spent a lot of time there. So, I'd rather, focus on the volume and the price action rather than the time being spent at a level. So don't confuse that. So TPO stands for market profile. That's the POC of the market profile, and volume profile, as you guys know, is the POC. Let's move on here. So kind of, the profile types that we use. So I introduced you guys lately a little bit more to the fixed range profile, where you can measure, if you have a nice run up, a nice break, let's say of a previous high, and it breaks through that, and you can take that whole run basically from, it doesn't matter if it's swing low to swing high. You can select the specific range that you want on TradingView only. Actually, I don't see that on TOS anytime soon. You can see the volume profile for that area. And how you can use that, and I'll show you guys in a couple of setups, is a lot of those areas get retested wherever there was a volume accumulation and the price creates an imbalance, meaning going up or down, price will retest, and that's where you want to enter short. A lot of time people enter short on the first break of these levels, and they regret it. There's a lot of testing done. Even Trader Dale did a lot of testing. Those failed about 67% of the time. So it's not as if in your favor to be playing the breakouts or the breakdowns as much as possible. Rather play the retest of these levels, and you'll see. And I'll cover a couple of examples live through the watch list tonight, so you guys can see how that works. Visible range. So basically, as it sounds, right, for people that are not familiar, it's the VSRP, I believe, and Dumpster, correct me if wrong. I think that's what they call it in TradingView, but I'll show you guys. It's basically whatever is on your screen. If you're showing from June to current date, let's say August 1st, the volume profile is going to be basically built from whatever is visible on the screen.
Shorty is VRVP.
Yep, there you go, VRVP. I always forget those little acronyms they have. And then the session volume is, I prefer this one. I prefer to look at this. And you guys know that we look for VPOCs. We look for the POCs of the previous days, because those will act as magnets as well. So, in addition to having the fixed range, having your session volume and finding the POCs above and below, especially if they're virgin POCs, it's probably the most accurate thing you can find. And a lot of times you're called lucky, just because those levels hit so hard, especially when it's a VPOC. and you combine that maybe with some previous skinny belly, or if there's any clouds or confluences, it just makes, the trading so much easier when you know where a potential bounce or rejection is coming. So any questions on the types? Next, we'll look at the visual breakdown of the volume profile. So this one's fairly easy. You guys see me using it every day. The highest point, or the highest shelf that you see on the horizontal scale here, is called POC. It's the point of control. So that means there was the most volume traded within this area. What I like to do, you guys see me doing this a lot, is that I grab a couple of shelves above, usually look for 3 up, 3 down around it, unless there's, a weird curve around it like it was here, right? So maybe I would have grabbed these two along with the bottom one here or bottom one here, because it falls off the cliff here a little bit of support. So I would grab that and I would make that a zone, right? I don't prefer to have a single line as a resistance buy or sell levels, just because they can fake you out a lot of times. And the more you get used to this, the better it is, because then you can have a plan and you can have a little bit of a cushion for your stop losses, right? So value area high, kind of what it means is basically where they're finding the value to be, it's too high at that price. And then value area low, they're saying, oh, the value of this stock is very too low, we need to push it up. And they usually push it back up. If the POC is in between, which usually is, they will push it back to the POC probably 90% of the time. And then you guys know from the volume profile, the rules that I gave you guys, there's about 10 rules. When we dip below the value area low, let me see. When we dip below the low value area low here, like we did, and we regain it, usually that means there's about 80-20% rule, 80% chance that you're going to go back to the value area high. So those rules are not in this PowerPoint, but they are in the Discord. So I do suggest you guys read those. And then when you look at the structure of the volume profile, so you have the value area high, the point of control, value area low. This is your profile high, profile low, profile high. And then, there's something called HVN and LVN. So they're not on here. Those are your high volume nodes. So these are the 3 main things. But then, depending on the volume profile shape, like, this is a lowercase b, you would have like a node above it somewhere where you're looking to short from those levels in the retests, right? So you have high volume nodes. Those are like thick lines on a horizontal scale, and low volume areas, we call them skinny bellies, like this one here. That means the price is most likely just going to fly through that area, up or down. Okay, so a bell curve, as you guys know, we use the 68% for the value area high, and that's mainly because of the normal distribution, right? The standard deviations. If you go a little bit more on 2 standard deviations, you tend to lose the accuracy, as you do, just mathematically, it's not as accurate. So usually staying with the 68% for the value areas is really, really accurate. And a lot of people that use volume profile refer to the 68% rule more so than any other number. Okay. Okay, so this is where we mentioned the high volume nodes and the low volume nodes. So we kind of covered it there. And then we covered the volume profile shapes and the meaning. So you have the D shape, uppercase B, P, B, and the double distribution, which is your B shaped here. Inside, so if it's D shaped, this is your basically inside day. Usually this means balance. The buyers are kind of either accumulating or they're happy trading the price where it's at right now. This leads to a lot of choppiness and a lot of potentially, you're talking about typical days or sideways days where a lot of times you don't want to be trading these type of days. P shapes, so this is a pretty aggressive move when the buyers come in from the bottom right here and they push the price higher, and then they're like, okay, well, what do we do now, right? I mean, we drove the price so high. Do they accumulate and hold this level, or do they drop it to a next high value node like they did here? If you take a look at it, and if you draw this line, you see how they dropped it to the previous high value node. There were some late comers into the party, right? They're like, okay, well, let's buy it, don't miss it. Well, then they're going to defend that level when it comes back for a revisit, and then they're going to send it higher. So any questions so far?
No.
Does it make sense, everybody?
Yes.
Okay. B-shaped profile. So usually, I mean, if you see this type of profile in an uptrend, in like a uptrending market, that usually means some kind of reversal, right? On a downtrend level, you can definitely see these, and usually you want to short these on the retest of the POCs and the accumulation around it, right? So if you put some kind of box around here and you draw it all the way to the right, you'll be able to see that we came back to retest this. We're not able to break it, and the previous support becomes resistance, and that's another confirmation for that. Okay. The last bullet, you want to kind of get familiar with that one. Keep it in the back of your head when you're trading. If this closes above the 50% retracement of your, high to low, there's a high chance that it's going to be debatable. It's going to continue going down. So in this case, if you grab from here to here, and let's say, we close below it, as we did here, for instance, I don't know what day it is or what stock it is, but 50% would be somewhere around here, and we close below it, there's a higher chance that you're going to continue down once you reject the POC. You're going to go to the next level, probably test the low of the day of the previous day, as they did here, and they supported it multiple times. And then once you break that, it kind of gives you the next set of targets to the bottom. Okay. B-shape, so this is what we call the double distribution day. These are really good days to trade. That means there's a lot of range. So sometime in the top area, that means that there was a lot of sellers, and they basically took over the control and they sent the price lower. But then some new set of buyers showed up, and they're like, man, this price is really low here. Let's accumulate as much as we can, and then we're going to pop it back higher. And basically, you're playing ping pong between the two areas, like right here and right here. You're playing ping pong. So you get the price here. Once you break it, you can play the retest, or just go along here and put the stop loss right below the shelves, and then drive it all the way to the next closest shelf. Especially here, you see that you have a little B forming. You want to be getting out in this area. Okay. So we talked about support and resistance on the POC. So this is, when you become more familiar with the volume profile and the price actions, this will become your bread and butter. Especially when you combine this, and I have this identified as one of my favorite setups later in the PowerPoint. You guys see that we had, kind of like a reaction to this level here. It was a really, really good support before. My mouse is about to die. Hold on one second. Okay, we got it. So here, you guys see that we had a nice bounce here. Let me see. How do you? So here, you see that we had a nice support here. You had a nice support here. Then we breached it, right? So another thing that I'm going to add to your arsenal of trading, and it's fairly simple. You don't need anything else in your chart. Is if you grab the fixed volume profile from here to here, what would you guys expect to see in this area right here?
Can you please repeat, repeat that?
Yeah, so if I grab the volume profile from this sell-off all the way to the bottom, right? What would I expect to see in the volume profile in this area right here?
Possibly a POC.
Possibly a POC, but you would definitely see some kind of accumulation, some kind of shelf, right?
Yes.
So now, what was previous support, previous low was here. So this is your low, low, low. Now this is going to become your resistance. So the break of the low becomes your resistance, and usually you want to take a short here, not necessarily here. Does anyone have an idea why, is it better to do it here than here? I don't know how to delete this. Let's see, right?
It's a retest.
Okay, but why? I mean, yeah, it's a retest, but why is it better?
Normally, after the retest, you're going to have a longer trend or trade.
That's true. That's one of the reasons.
Verification.
But
you're looking for the same pattern.
You're looking for the same pattern, but there's one piece you guys are missing, and this will help you. if I'm entering here, before I didn't know where the buyers are going to show up. Here, well, I didn't know where they're going to show up. Well, now they just told me where they are. If I enter short here, where do I have to get out? I have to get out right here.
Yeah, right down at the bottom.
I'm not saying sell as soon as it touches the line. You sell into the strength. You don't want to be placing your sell orders as you're touching. Even taking a little bit less profits better because you're going to get a better fill anyways.
Mm-hmm.
You want to catch this IV rising. You don't want to catch the reversal and sell here because then you're going to lose money.
Yeah.
So let's see. Where's that racer?
So the reason for the retest is, the buyers let us know where they're at.
Well, we know basically where the level is. If you didn't know anything else besides this chart, right now I would know the buyers are here. And if I'm entering a short here, I should get out somewhere in this area.
Okay.
So, and then another, why do we get in here? Well, that's one of the reasons. And we talked about it before. So if I'm shorting, here, right? If I'm a short seller here and the price comes back to my level and I'm still short, what would I do to this level here?
Short again.
You're going to make sure that you don't go above it. They're going to add to their position so they can short it. And if these guys, let's say that they were going long and they're approaching this level, what would they do at this level? What would they do here to help you go down? If they bought the shares here,
Your price.
what would they do here?
Buy.
If I bought here, you buy here, what would I do here?
Sell.
So
I would become a seller here, hence helping who? The person that shorted from here. So now you have the buyers flipping for you, and they're causing the rally down. So you have the seller protecting his level, and then you have these buyers exiting their long and going short. When you're covering your position, you're helping the case. Does that make sense?
yes.
Yeah.
Okay. So now you'll see the scenario too of the same thing like here. So here's your support, support, support. Once you retest the resistance, that's your short position. And this happens in every time frame that we trade. So now, look what happens now. And this is the beauty of it. Earlier, we said, you would short right here. And look, you're still good. You put your stop loss right above. You're still good. Your first target is the bottom where you showed up before. You get out of the short here. A lot of people would do what here? The previous support, this level, the blue line here, is now breached. We broke above it. Now you're looking for it to become support. And this is where you go long. You don't go long here. You go long here. If you're to grab a volume profile from, let's call this point A to point B, this is still, look at the area. Look at this right here. This tells you there was a heavy volume accumulation in this area. So once you break above it, you just wait. Let these boys do the work for you. If you guys watch any of those, sea animals and sharks, usually when you see a shark, what do you see right below the shark? I know it's kind of weird, but when you have a big shark, there's tiny little fishes or sharks right below it.
It sticks right to it, yeah.
And they stay right under it. And there's few reasons, if you read about it, why they stay under it. One's protection, right? Two is also the leftovers. You don't have to be the big shark, and we are not the big sharks because we can't move this market, guys. There's not a person in this call that can even make this much dent to the market. This much. You can't even do this.
What?
In the market, this is institutional buyers. This is us. You want to play alongside with them. You don't want to play against them. So if they said, okay, the previous support turned into resistance, and now we are breaking above the resistance, well, these buyers here, somebody will drive the price back here, the short sellers. But these short sellers are going to start covering here, and they're going to drive the price back up, and you're going to hop in the long call, and then you have a target to go right here, and that's where you'll get out. This is the high and low breaks. And now, if I added the volume profile here from point A to point B, I guarantee you this would have been a P-shaped volume profile, and it would have had a volume node right here. I guarantee you in my life that that's exactly what will happen here. So if you guys are not familiar with the pin bar patterns, you should look into it. You really want to look for, another confluence point is the candlesticks themselves. We're not going to dive deep into it, but if you want to look for any candle type, it would be the pin bar. Whether if you're intraday trading, I suggest you wait for 15 or 10 minutes for pin bars, and you want to wait for that 10-minute or 15-minute candle to close. And if I'm going long off of the pin bar alone, let's say this was a pin bar that, we had a down action, we came up here, and then the pin bar showed up right here, right? I would wait for the high of that pin bar right here to break, and I would probably get in on the break of that candle, like midway once it breaks this candle, or you could wait for a retest here and go. It just requires a lot more patience, which it's not a human's nature to do. Okay, so let's see. Pin bar example, so there's a couple of them here. You see this guy right here. This was telling you there's a heavy sellers. So another thing, I'm just going to keep preaching it. If you grab the volume profile here to here, you would know where the heavy sellers are. And if you just look at this price action here, you see that there was a lot of volume accumulated here, hence the trend continued down. So if the trend is continuing down and you grab the volume profile and it's telling you the POCs in this area, you're playing the trend by shorting it from this level, and then it goes back down. And in the middle of all of that, you're adding a confluence point of a pin bar candle, which is right here. And most people that we watch on Twitter, they will short this a couple of times. They will catch it. I promise you. I'll show you a couple of examples. They will short it right here, and then they'll just go whoop, and then they'll wonder what happened to my account. Okay. So the D shape. So I mean, these are your typical days, and as you guys know, you have responsive buyers, sellers. If you're gonna trade this type of day, you draw the high and low of the day, and you literally trade within that area, and you want to stop trading this type of typical day around 2:30 to 4 o'clock. You don't want to be playing too much bounces on those end lines, because that's when the volatility comes in, and it's what we call power hour. And usually from typical day, you can go to extended typical day, and you don't want to be caught long on the bottom in those hours, and then they just break through it down, and then you have a losing trade. So usually, between 2:30 and 4, you want to stop trading the typical behavior of being a responsive buyer on the bottom, seller on the top. Does that make sense? Okay, and the last bullet, if you guys pay attention to it, once you have a range like this, let's say this is our range of the stock, and this is your initial balance high is right here, your initial balance is here, low. If you're taking a short position here, you just basically draw the fib from here to here, and you find 50%, and you just take profits every time. If you short it, take profits of 50%. If you're long, take profits of 50%. And that's the best way that's your rule that I just gave you for the D-shaped volume profile. That should be one of your rules, okay? All right, so let me see the P-shaped volume profile. So usually this is uptrend or ending of a downtrend, or sometimes, I've seen it in the short coverings. If you do see something like this, if the POC is on the top, right here, or, let's say POC was here, you have a volume cluster, a high volume node. Once we go here, they'll most likely dip, they'll come back, and that's where you want to go along on a P-shaped volume profile. Okay. B shape, so we kind of talked about it previously, right? So this is your, I'm sorry, this is lowercase b. I'm looking at my other screen, I had uppercase b. So lowercase b is usually in a downtrend. It can occur on the top, right? On the uptrend, when you see this, usually means reversal. So if you see something like this, right, if your volume profile POC is here, and you have a really nice cluster, aka high volume node here, you want to be looking for a short opportunity somewhere in this range, so you can take it back down either to the first POC level here, or any level that you have identified after that. Usually POC being the first target is a good profit. Okay. We covered this one here. So this is basically you're playing, kind of ping pong. You have a zone here on the top, you have a zone on the top, on the bottom here. So you short here, you usually want to get to the next high volume node, trim there, and then you get out here. And then once you break, your price action is dictating here. You have a bear flag. Once you break this high right here, you can go long and go to the next zone where the high volume node was. Okay. Now we're going to get into something something that I favor a lot, especially lately. We've had a lot of traps, and the volume is the only thing that will not lie along with the price. So if you want to kind of incorporate this, I will show you kind of on the screen the two examples, and then we're going to go through the watch list, and I'll bring up a couple of ideas of where these things can happen, what time frames you should use. If you're swinging, you kind of want to at least use a daily time frame and look for a swing high and swing low and buy it on those levels. If you're playing intraday levels, you want to look at a day session and see if we have a trend up, then you grab that trend that pushed up, you grab the high and low, and I'll explain that in more visual but format so you guys can see it. So let's kind of cover this. We want to use the fixed volume profile to select the swing high, swing low. It doesn't really matter if it's swing high first or swing low. So it's not like fibs. You can use either or. If you're looking to go long, you want to wait for the retest of the volume accumulation zone. So meaning if we have a volume profile that looks like this, and we pop from here, and there's some volume nodes here, you want to wait for a node. Whether we come back here and retest to take it long, this would be your entry here. So that's what this one means. If you're looking to go short, it's just the opposite, right? If we break down this way, you want them to come back here, drive it, and then you take it down and you have your first target, right? That's what we covered previously in some of them. It really is a waiting game. And a lot of you guys that I see, and I see in your profits, I see it in your trade logs, you guys are itching to take a trade at every minute that you're watching the screen. I want you to change that. I want you to wait for your setup. You say, yes, I'm going to buy here. And if it doesn't happen, I'm not going to trade today. I'm a buyer here, and that's it. If I'm a buyer here, this is my stop loss. You follow your rules, and I promise, the more it hits your stop loss and you respect that stop loss, it's the process that matters. You're going to thank me 5 years from now. You're going to say, man, Shorty taught me this. It's the process your first 2 to 3 years, guys. You can learn all you want, and if you look at your P&L every day, you're going to not like it. Because a lot of you guys are hectic traders. You want to buy, I'm going to buy here. I see this break, this indicator telling me this, or this one telling me this. Either if you're using an indicator or whatever you might be using, but you got to wait for your setups. You can't just, let me go long because somebody on Twitter said to go long or whatever. You want to wait for your setup. And this is one of the easiest ways to make money and wait. This is key. You want to trade in the direction of a trend. A lot of us, including myself, we fall for, the psychological tricks that they play. Oh, the market should go down, right? Oh, the market has bad news, bad news, bad news. And then what happens? Whoop. Whether it's a short rally covering or if it's truly reversal of the market trend, it's to be determined. But, you come in unbiased, right?
So,
Have the
Shorty, your voice is double or echo. Even mine. I don't know what happened.
maybe it's on you. Is anyone else experiencing this?
No.
No.
Sound fine with me.
Yeah, maybe go on mute, Angel, and see if that helps.
Do what?
So trade in the direction of a trend. That's key, right? Especially when you're using volume setups, right? And if you see P-shaped volume profiles, there's a little volume node and you're running like crazy. Well, just wait for that volume node to come back to retest. And you guys will see it on ES. There's a couple of them that I was watching just moments ago before we joined the call. So, and you guys know this, right? The longer the accumulation, the higher the chance of a trend starting, and then the longer the accumulation, the stronger the trend will be. So you guys have seen this in the Wyckoff theory that I've talked about before in the previous classes. If you're accumulating for 12 months, and once you break that level, there's a high chance, it's going to be basically the retest of that whole accumulation zone. So you measure the zone and you set your first target and that zone, the distance between the top and the bottom, and you basically trade it. Is it going to go higher? Probably. Is it going to go, not even to this? There's a high chance, but at least you have a target to play. When there's a huge accumulation, there's going to be a violent move, imbalance move coming from that. So the three setups, the last setup I did not finish in explaining, so I can talk about it. I want to put the rules for you guys because a lot of you guys are getting familiar with the trend lines and using them, but there are certain rules you should follow, and especially now the ES is in a nice channel up and a nice trend lines around it. There are certain rules that you want to follow, when to short it, when do you go long. So we'll cover that, but probably not today. So we'll focus on we pretty much covered this one with that example of the support where we had two taps on the bottom, you broke it, came back, you don't take here, you take it on the retest and go along here, and then your first target's right there. So we kind of covered this. We'll cover it more. We'll combine these two setups, and you guys will see how this creates really, really powerful levels. So accumulation setup. So let's kind of take a look at it here. I just kind of found one earlier on 65 minutes. This is the most current ES chart. I grabbed, if you guys see it, I grabbed the latest what we have, and I just kind of want to walk you through it. So what I did, I grabbed it from point A, and I grabbed it to the point B. Remember, it doesn't matter if it's A to B or B to A, you will get exactly the same volume profile. What do you guys call this right here?
PLC, VPLC.
This is our POC for this area. So this would be since, what is this? This would be, I think, July 14th, call it, to almost end of the July. So for a whole month of July, I would say we've been running up. So that's what I grabbed. So now, if we were playing in the direction of a trend, there's a couple of areas, right, that we should be aware of, right? So if you look at the volume profile, if this price was to drop here, you would expect a lot of buyers to come in because this is where they accumulated last time. If you look at this, right, so I drew it kind of here. They accumulated the price so heavily here, and then they drove the price up. They had a low retest. They hit the value area high. They came back down, and I think we even called this one here when it did happen, right? So now the best thing that you can wait, on a bigger scale. So I grabbed almost a month. If you wanted to go long, and let's say you want to play on the first touch, if this price was to come back here, on the first touch of this area, you're grabbing calls and you drive it up, and your first target would be right here, which would be your value area high. Most likely would reject there, and you would get out happy, right? Probably about 80 or 100 points that you would get on ES, or if you're trading SPX during the day. But this would be a nice area to get in, right? And you would put your stop loss. Let's say you see it's creeping inside of this. Let's see. I wish there was an easy button. If you see the price is approaching this level, and of course, if the candles are getting smaller, that's a good sign. That means the sellers are getting out of their short position, and now the buyers are going to be violent, and you can expect a quick reaction of this level. If you see the candles are somewhat, it's a big candle and they got in the middle of this zone right here, well, then just wait, wait till it gets to this POC, and then see if we can get a little bit of accumulation and then break the accumulation here and then go long on that. So that way it kind of protects you. I like to go on the first touch, and then I put my stop loss. Can you have a little bit of a drawdown here? Yeah, this area here is, what I'm willing to lose anyways, but I know where my target is, so I can play that accordingly. Okay, so like I told you guys, there was a really nice trap here, a perfect trap executed by market makers. And just think about psychologically, what is everybody expecting, right? Everybody was expecting a sell-off, 75 basis points. PCE is, 1982 high. Not much good news has been published in terms of the economy. Then you have, non-political. You have the president fighting, and arguing that we are not in a recession. All the books that we have in economics tell you the 2 GDP's contraction means it's a recession. Now they're saying, no, it's not. So there's really not much good news. And now, there's a war in Europe that's about to break out, and, Taiwan, Pelosi. Me personally, I haven't seen good news, but they drove the price up. So what do you do if you're a market maker? Well, you accumulate it. Look at this zone right here. And what do? Well, you break the zone down and get what? What do you think happened here once this broke here? Remember, I talked about those people that
Get faked out.
So those people that play the breakouts, let me see. I don't know if there's this. I can't draw here, but you guys get the point. Like if I draw a box around here, and I suck at drawing, freehand drawing. So if I draw a box here, yeah, sure, there's a box, but there's, the area that I'm green in. If people are playing this breakout here and they expected a retest all the way to here, what do you think happened? All these shorts got trapped. And if you didn't have a good stop loss like this POC here, well, you're in for a ride. You're just getting pretty much like tossed around on this crazy run from 39.40 to 41.40 for about 100 points. It was pretty brutal to watch. Well, actually more, 200 points. So this is the trap that I'm talking about, hence the retest, right? So even if you came here on the previous, if you see here, they gave you even another candle that makes you think, yes, we're retesting this, we're going to go short. And remember, there's no strategy that's going to work 100% of the time. That's why your stop loss and risk management is more important than profit managing. So if I did not have, and I was short on this as well, if I did not have a stop loss above it, I would have been killed on ES. So that's why it's key, right, to be a risk manager rather than a profit manager. I did what I was supposed to do. It came back down. I was like, okay, well, I'm just going to short it here. And I took a short. I should have known that this move down needed to go to the bottom of the demand zone, and then I'd be able to short it. And I didn't do that. I was eager to trade. I took a trade here. I took a stop loss. I think it was about 26%. I took a stop loss on SPY, on SPX, ES, few of them, but then I was able to reverse and I was able to play the trend up. But I just want to cover this, why retest and stop loss is so important for you guys, especially if you're trying to grow an account. You cannot not have a plan. And this was, I executed per my plan exactly. It was a losing trade, but I'm proud of it. Okay. Any questions on this? So we accumulated here on the buy area. So now on this heavy chart, right? I mean, long duration chart. I mean, you're talking about, almost a month, let's say 20 days. If we come back to this area, I'd be a buyer right here. I'd buy some calls and go higher. Even if I get it to this point, it would be 100 points that I play. But this occurs on all time frames, right? You can grab a period from here to here and see where's the volume profile and where are the shelves and where can you look for a retest. I mean, if you look here, this looks like a nice little consolidation zone. So it could be that they broke out of it, come back, and then go higher. And if they break 4,200, we'll take a look at it on watch list side. It becomes fairly bullish. That means weekly making higher high. Okay, so this is our bullish example. On a bearish example, here's, I think I used ES, but it was kind of towards January. So here's the volume profile I grabbed. Oof, I don't know why this happened. So this is our the break of this volume shelf. Our POCs here, and at that time, if you go back and the little time thing on TradingView, this was a POC at one point, and you see the shelf is really close to the POC here. So if you wanted to short this area, definitely you could. If you wanted to short, this area as well. Sorry, my drawing is horrendous when I do this. You can definitely short this area, but the concept is more important than a level in this discussion, right? So we break this area, we break this at that time POC, you break below it, you make a nice little short, you hit the value area low, and you see that there's a lot of buyers, right? The buyers are not letting go of this price going lower. They dipped it a little bit, but they brought it back up. So then what you do is you enter a short position here, and your stop loss is above it. And you use the shelves right below as your first target. PT target 1 is right here. Your PT target 2 is right here. It's where the skinny belly starts. Usually buyers will show up. And then your last PT target, you can use the value area low, or you can draw around this here, and you'll be for sure selling into the strength rather than waiting on somebody to wash you out and flip the side for you. It's always better to sell a little bit early than all the way to the support line that you see here. So that's why I said this would be your PT3. And then this here, this line that I mentioned, this would be your stop loss, because you're waiting for the accumulation, and you're being kind of hiding behind these walls of these sellers. If you're able to break this, then okay, well, I'll get out too. But as long as these sellers are here and they're shorting, you're staying in the trade. And look, you stayed in this trade. Let's say you took profit here. You actually re-add on this level, and now you trim again, and then you trim again here, and then you trim again here. And it's just looking at a chart and making sense to why it works. And then even if you look to the far right, I mean, I forgot what time frame I'm on this. I think it was 2 hours or something like that. But here, you come back here, and they set up a little trap. They break above this level. So this is a little trap here. They set it up, and then once they dip below it and you come back for a retest, this is a great short. And then you play the same levels. Look, if you took a short here, there's your first price target. You get out. Your second price target, and then your third price target right here, and you get out. The broken high and low, what I was showing you guys before, when you combine the broken high and low, which is your strong support, similar example to what we had earlier. So if you look at this, I kind of took it from here. I could have taken it from here to here as well. When you look at it, right, so this was our support area right here, which also happens to be the value area low, which is going to be a really, really strong area for price. It's going to have a reaction to it. And you guys see, you had a nice reaction here. I mean, here, 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 and then it reclaimed it here. And then it seems like, oh, this is Caterpillar, by the way. They basically gapped it down below it. And now you see that we found some kind of support somewhere around 165, right? I didn't go into it to where it was the support, but now we are approaching that resistance where the sellers were really, really aggressive. The only thing that I don't like would be what on this short entry here?
Earnings.
Earnings is one. What else? I don't like that they gapped it right below it. It seems like they were not able to break this in normal trading hours. They're able to break it here. And look, we brought it back immediately. I mean, this is on a 4-hour chart. Within 8 hours, the price was back above that support. So, to me, it sounds like somebody wanted to get cheap shares, that there was a liquidity break somewhere around here, and they're trying to get the shares for cheap. There was a lot of stop losses right here. When you look at even numbers, most of retail would put a stop loss at 199, right below 200, and look what they did. They gapped it down. People started panicking, recession, sold it. Now they drove it back up, and now, the question is, when you open up tomorrow, do we break this? And there was a heavy, heavy buying of October 220 calls. So they're targeting somewhere around this area here. So now tomorrow is very important. If we break above this, you wait here, and then you grab these calls for October. No, yeah, I mean, this is a company that I have in my portfolio. It's a very strong company. If you can buy it on these dips that they're giving, like these 160s, this is, for me, it's a great opportunity to add for a long time, especially if you have kids. Does this make sense? Broken high and low. So what I look for, we broke the low here, which was acted as support. This was low, low, low. So then the best thing you can do, you can grab the volume profile from here to here, and you look to re-enter the short position somewhere here or wherever that shelf is. Let's say they drive it all the way, they want to drive it to 220. That's fine. I mean, there's a high chance that they roll with the ER, and then you could look for a short or a fade all the way to 200. And it just depends how the volume reacts to it and, where the accumulation happens. This happens on every time frame, guys. I just did a bigger picture so you guys see it. I'll show you guys in smaller. Any questions on the volume setup? So you have the accumulation setup, you have the break of high low, and then you have a combo of these, which is really, really, really dangerous. Like, it's a really good setup for trading. If you guys are no questions, then let's get into the charts itself.